Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And happy Friday. It's May 8th. And I hope you guys are having a great morning and great plans for this weekend, especially as some of the economies are starting to reopen here. Hopefully, we'll get a little bit more, get out there a little bit more. We do got very important data to go over today, and those are the Bureau of Labor Statistics job numbers. So let's jump right into it. We'll start out first with the non-farm payrolls for the month of April. So in March, we had a loss of 870,000 jobs. Forecast for April is calling for a loss of 22.1 million. It came in just under that to a loss of 20.5 million. So pretty astounding numbers right there. Uh, also got the unemployment rate for the month of April. So we had 4.4% rate in March, and just before that was at 3.5%, which was a 50-year low for unemployment rate. So amazing how this has dramatically changed. The forecast for calling for April is at 15.2, and it came out 14.7. So this goes on record as the second highest unemployment rate on record, just behind the Great Depression. The number we had from the credit crisis was right around just over 10%, and the Great Depression, from my understanding, it was like 25%. Now, to go on, last but not least, we got the average hourly earnings for the month of April. So in March, we saw a 0.5% increase for those hourly working, hourly earnings, and forecast got for zero point 0.8, and it came in at 4.7%. Now, this number is probably a little bit skewed because the level amount of jobs that got eliminated were more likely the lower income or lower pay type of jobs that are out there. So these other jobs that we're seeing are probably skewing it because they're a little bit more higher in pay. So you're probably seeing a little bit of a uh, disproportionate amount of income being of jobs out there that this is being applied to. So I think the number could be a little misleading in the sense that again, we lost most of the jobs that we lost were probably people that were lower on the totem pole, so to speak, in terms of pay on the pay schedule. So this number is probably a little bit out of whack right there. Let's jump ahead here to the headline news. The stock market is up, which is kind of surprising, you would think, but in light of a lot of economies starting to reopen a little bit, I think they're kind of seeing it for what it is and just kind of trying to look forward and a little more optimistic. We'll have to see. Also, there were some positive reviews that came out between U.S. and China's talk the other day. So they're saying that they're working towards it, and it had a basically shed a positive light on it. So that was some good news as well, as we probably will need both of each other to try and get out of uh, this current economic state. So let's see how this is playing on the bond market. Bond market was actually up a few minutes ago, and it was just above this 25-day moving average. It was actually up 5 basis points, and now quickly just changed a matter of a couple minutes here, down 5 basis points. So right now we're down 5 basis points. We're trying to break above this 25-day moving average. We'll have to kind of wait and see that this might happen with this jobs report, but again, it is still early, and we'll have to kind of wait and see if the market changes. So we do got the Fed buying mortgage-backed securities, which could help boost a little bit further. But again, we'll have to kind of wait and see what happens here. Now, as you can see here, the yields dropped below the 25-day moving average and are trying to work their way back. Now, they're just a hair under this. They're sitting at right about 0.656 or something like that, just right around this level here, right at this 25-day moving average. So again, if this could get pressure lower, this might help mortgage-backed securities boost upwards a little bit. So we'll have to kind of wait to see how this plays out. So right now, there is no change in pricing for mortgage rates. So mortgage rates remain unchanged because they're more of a sideways pattern right now. So speaking of such, if you guys are looking to refinance and or buy, please reach out. If you guys are located in California, you can either direct message me or email me where you find this. In the description, I will put a link if you're ready to go. You can click on that and then just go ahead and get started with the loan application. And if you wish, either at that time or after we speak, you can go ahead and upload your documents to get started. All right, you guys have a great rest of your day. Enjoy your weekend, and we will see you guys in Monday's video. Thanks so much for watching. Bye bye.